Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Tuesday, January 22nd, 2013. Well, a continuation of the trend to the upside today. The candle that we're analysing is the second last candle here. The final candle is currently developing in the market, so we can't analyse that properly at the moment. But the candle that has just terminated trading is the spinning top type candle. We are in an uptrend. The previous trend was established some time ago, and the trend continues, and this spinning top type candle does raise doubt about continuation of this trend to the upside. If we look here to the recent past, we are now trading in an area where there was previous strong support extending down to around this 1688 level, and we can see the shadows on the bottom of these candles here. And now for the previous 4 or so trading days, as the market is trading within this area between 1688 and 1700, we are seeing price rejection, and that's highlighted by the shadows on the top of these candles, and it's highlighting the buyers losing commitment in this area. Now obviously the 1700 level of resistance is having its effect, and it certainly does raise serious doubt about whether this market will trade up through the 1700 level. Above the 1700 area we have this highlighted yellow zone that was a very strong area of previous support and resistance, and that also, if the market does trade through the 1700 level, will be a deterrent to the market trading to seriously higher prices. But we also have the cloud trading up within that area too, and very close to the 1700 level now. And as the market moves on throughout the next few trading weeks, the resistance from the cloud will actually move lower, and we do need to be aware of that. And that does suggest that this market may not end up trading to higher levels in a hurry unless we see some serious bullishness over the next few days. The area of the cloud here is quite weak. It's fairly small, and therefore the amount of resistance offered by the cloud is fairly minimal, but as we move into the next trading month or so, the area of the cloud actually increases, and it does suggest that the resistance offered by the cloud around here is going to be quite strong. In terms of Ichimoku, we have a bearish market in the long-term time frame, obviously, by trading down below the cloud. So obviously the market has potential to find resistance up around this 1700 area and then trade off back in line with the trend, obviously, in the second time frame. But the market is bullish in the medium and fast term time frame by trading above the Kijun-sen and the Tenkan-sen, and we do need to be aware of that. Now we did have the Tenkan-sen cross above the Kijun-sen a few trading periods ago, and that does suggest that there might be some bullishness in this market, and it is a buy signal in Ichimoku charts terms, but it is a very weak buy signal because that signal has occurred down below the cloud. And the reason that it is a weak signal is that if the market does attempt to rally, then obviously the market will interact with the cloud, and the cloud will offer itself as very, very strong resistance to this market. Now if this market does come off, we do have fairly strong support at the 1688 level, as previously mentioned, but also then down around the 1680 level, and then below there at the Kijun-sen and the Tenkan-sen, which are trading at 1675 and at 1665. So very, very strong support down below, coupled with this very, very strong resistance overhead for this market. Now in terms of the Fibonacci extension, we're examining the current first time frame uptrend and its relationship to the previous time the market was trending up, and here for the previous 1, 2, 3 or 4 days we've seen the market test to or above the 78.6% level and be rejected from there, and that does suggest that there is potential for this market to come off. More importantly, however, we're now looking at the Fibonacci retracement of the prior downtrend, and we saw the market trade through the 100% level in a bullish manner, but now testing to the 161.8% level, and capitulation around that area with this spinning top type candle and the shadows on the top of these candles. It does suggest that there is good potential for the market to change trend to the downside, so we really do need to be watching the low of the current candle for a potential lower high and lower low. So just summarising, a bearish market in the long-term time frame, bullish in the medium and fast-term time frames, both trading above the Kijun Sen and the Tenkan Sen. But we are seeing some congestion in this market and quite some indecision and rejection from the area just below the 1700 round number level. The cloud will come into play very soon. The market has interacted with an important Fibonacci level, and there is potential for the market to come off, but we do have strong support below. The area to be looking for here really first tomorrow is the 1688 level, and then just below there down around the lows here. Very strong support down below the market, however, if we do change trend around the 1679 level extending down to 1665.